Welcome to the World Copper Podcast. I'm Andy Shaw in Queensland in Australia, and I'm joined today by Simon Hunt of Simon Hunt Strategic Services in the wonderful city of Dubai, and Juan Carlos Guajardo in the equally wonderful city of Santiago, all the way over there in Chile. Well, gentlemen, welcome to episode 13. We've spent recent podcasts pontificating about copper bouncing around rather boringly in the sort of mid $13,000 a ton, or whatever that is in pounds, in dollars per pound. But we've now achieved, at least in nominal terms, new records. I believe we've hit $6.70 a pound for those who measure copper's price in those metrics, or almost $14,000 in traditional LME terms, almost $15,000 a ton. Record highs. We can talk about that as to what that translates into in real terms, but I'll open the podcast up with, so, well, what, to quote Shakespeare, what news on the Rialto, or more specifically, a gentleman called Solanio, who's really trying to pick what's happening in the merchant trade. And it's very difficult for us to get away from recent events which still hover around narrow channels in important merchant trading routes that have remained closed. Simon, maybe you can give us a bit of a heads up of how you see it in your rather hot part of the world, in the Middle East.
Well, the hot part of the world best describes the copper sector. It's hot. But seriously, the price, as you say, is close to 15,000. People talk about the market being in deficit. Well, it's not. You use the ICSG data for the first 5 months of this year, the market was in a surplus of 273,000 tons. Where's the deficit? Where's the strong demand? If you look at the data for the first 5 months for America, how much has been the increase? 1%. If you look at Europe, what's been the increase? Practically nothing. And in China, when you account for the big substitution that's taking place in low voltage underground cables and in ACR tubes, copper consumption is only growing by 1 to 2%.
That's just this year.
I'm talking this year. Yeah. So what's going on? Why is the price climbing to new records when it's not being supported by physical consumption? It's partly a money game, and it's partly a strategic game that funds close to the government are just buying up everything that they can lay their hands on.
Yes.
And John Gross, a good friend of mine in America, has actually produced, which I reported on with his permission, is his price cycle. And that's going to take us up to $16,250 odd. And then, as he quite rightly says, that is the end of it. The market will give back virtually all of what it has picked up on.
Well, let's hold that thought, Simon, in terms of the price, and we'll come back to that topic about, well, are we in a new paradigm? And it's interesting in that context that you're talking about a cycle, and you're still looking at, I know you're very sort of keen on assessing cycles in various forms, but beyond the metrics of this year, where, I mean, are we in a very unusual space that we've seen the geopolitical situation as it is, the impacts on the global economy of having the Straits of Hormuz is essentially closed, or at least very highly constrained. Oil I think is Brent is somewhere around the high 80s at the moment. It's been higher, and we've talked about the impact of products other than oil that rely on that important trading route. And then of course we've got the disruptions that also happen to the Gulf, to Suez, and transit through Suez. But here we are with copper at record nominal highs in a world that is both turbulent and, as you have pointed out, well, the demand picture is not that rosy, at least in the short term.
I think, Andy, we can't ignore the distortion that the geopolitical situation, particularly in the United States, and the threat of tariff is posing into the market. We have a strong stockpiling in the United States. Actually, we have seen an acceleration in the last weeks,
Yes.
which I think is increasing the distortion. We have a big stockpile in the United States, and that is drying up the stocks around the world. So we have an artificial situation of deficit in the rest of the world, while the U.S. is accumulating 1.5 million tons of copper in his territory. So I think that factor is impacting the price at the moment. And of course, we have also the very weak situation in supply. Perhaps that's a situation that is anticipating a much, let's say, tighter situation for the next year. But it's also weighing on the investors' approach to the copper market.
Yeah. Well, Juan Carlos,
I would add one comment, if I may, and that is, it's probable now that there will be no announcement about a tariff.
Mm-hmm.
The market has assumed it, and the US government will just allow the market to assume it.
Yes.
But as I started by saying, what I should add is that we have not seen the impact yet of the extremely high oil product prices on the system because of the draining of government reserves, particularly in America. So you wait and see when, for instance, you're not just seeing high prices for diesel and jet fuel, etc., the physical shortages. Physical shortage for diesel. Diesel goes into everything. Production, consumption, transport. So I think it is, from what I pieced together from my friends who are pretty close to what's going on in the Middle East, I think it is highly unlikely that there will be any near-term opening of the Hormuz Strait. And what we are also seeing is that the Houthis, who have been besieged by Saudi Arabia for so long, are retaliating and have twice in 1 week bombed Saudi Arabia's most modern and largest oil refinery in Kazan. They have also destroyed the pumping station on the east side, so that there is now no oil flowing through the pipeline.
Mm.
I'm told also that the pipeline in the UAE to Fujairah is also not operating. So you've got at least one of the largest oil suppliers actually not being able to ship anything. So they are not generating revenue. They are and will continue to be cash short.
Mm.
What does that mean to US financial markets?
Yeah.
At a
Well, you,
time when the bond market is very fragile. So I think the odds are rising that 2027 will be a very difficult economic year in America and in most other countries.
it's we come back to the point I was making earlier that we are in I can't remember a cycle where we've had such strong potential or actual recessionary pressures, and we've seen prices so high. And I think you mentioned before, Simon, that there's a big element of revenge tactics that are going on in the Middle East. And again, I come back to quoting Shakespeare: "Cry havoc and let slip the dogs of war." The famous quote from Julius Caesar, and my sort of preference over that is moving a bit later in Shakespeare's amazing works is his concept of mercy over vengeance and Prospero, the rarer action in virtue rather than in vengeance. And I adjusted the English there a little bit, but we could go round and round in circles talking about the geopolitics and the macro environment. Let's face it, we are in a tough alley in terms of world economic growth prospects over at least the rest of this year and possibly longer. But the price is the price, and a big element of that is the belief that, well, we're not exactly running out of copper, but we're moving in that direction. You remember the sort of peak oil phenomenon and discussions of some years back, and I've seen a few commentators quote, "Forget about peak oil, think about peak copper." Juan Carlos, you've put together some very interesting slides, which you thank you very much for sort of sharing those. But you made some extremely good points in this. Maybe we should give you a bit of a platform to talk through some of your thoughts on the supply side.
Well, yeah, thank you, Andy, and Simon. Well, we have been watching the evolution of the copper industry in the last decades, and we have found that after the super cycle, the copper industry has been very, very conservative. After this experience in the super cycle.
So what you're sorry, just for benefit of our listeners, you're really talking about essentially the China boom phenomenon.
Yeah, from early 2000 up to 2014, basically. Well, this 10 years period was extremely important for the industry because significantly changed the fundamentals of the copper industry. From a conservative and organic growth industry towards something else. But in our opinion, didn't deliver well. That period actually disappointed investors. The industry paid a lot of money for assets, but actually the return to investors was disappointed. After that, we have seen an industry much more focused in regaining confidence from investors, putting a lot of efforts in control debt, in paying dividends, and not significantly in growth. So there are a number of indicators showing that. So in our opinion, what we are seeing now is that, in spite of the very good perspectives for copper demand in the next years, we have a gap of projects, at least in this decade, and that's certainly part of the explanation why some players are anticipating this situation and betting big in the future of copper. I think we can elaborate more, Andy, Simon, on some indicators that are showing that well, this
There was there was
this analysis.
one statistic I think you provided which surprised me: riskier greenfields and more capital intensive brownfields, at least in Latin America. That took me a bit by surprise, that the capital intensity of brownfield projects was quite
Yes.
a significant bit higher than greenfield projects. I know the reference base there is of different sort of orders of magnitude, but maybe talk us through that a little bit. That's an interesting one, because when you absolutely the era you're talking about is the especially the major companies getting praised for capital discipline. Ironically, capital discipline means you don't grow as much in terms of production.
Yeah. Well, the number that you are referring to comes from our database, and yes, we have identified this unusual trend. Capital intensity for brownfields is higher than for greenfields in Latin America. This is heavily influenced by the Chilean situation. And reflects, in our opinion, that the complexity of the copper industry in Chile is going up. We had a big flow of investment in Chile in the 90s, and that was a big shock of supply to the global industry.
Yes.
But since then, we have seen a much moderate growth in the Chilean mining industry. And of course, since the 90s, we have seen, let's say, a mature industry. We have a mature industry now.
Yes.
So the combination of this maturity and the big size of deposits in Chile explains that if companies want to stay on business, they need to put much more money on the table.
Do you think that do you think that metric translates into other geographies? Coming back to the sort of especially major companies, and no one should take this the wrong way as being a criticism, but there was a lot of pressure on the major companies to rein in capital discipline. We've seen, and you alluded it to in a lot of your presentations, that the difficulty of growing supply and the technological challenges of, and you've given us examples in the past of these deep mines in Chile, for example, block caving operations, technical challenges. Is that a metric that you think is not, it's not just, surely not just restricted to Chile?
Well, I think it's a very good question. let me start with Latin America, which is something that we know much better. In Latin America, Chile is an exception. The rest of Latin America has a much higher greenfield portfolio. So we can't compare the situation of Chile with the other Latin American countries.
Yes.
And talking about the rest of the world, well, in Africa, for example, the copper belt had, let's say, an underinvestment period for such a long time. We are now seeing the restart of interest to develop the copper industry in Africa. So probably in the case of Africa, we will see a wave of new greenfield projects and not the same situation that we are seeing in Chile. So it is hard to find similar, let's say, examples like Chile. Let me give you a couple of examples in the case of Chile that will illustrate what's going on here. The case of water. The Chilean mining development since the 90s was based on continental water.
Yes.
However, after several decades of exploitation and also due to the climate change, we have seen a depletion of continental water sources. And now the development of the mining industry and the continuation of the mining industry in Chile is based on seawater. The cost difference is significant.
Yes.
I mean, it could be 10 times higher cost of water comparing these two things. So this is just one example. And the second example is the recent announcement of Codelco. Codelco announced the suspension of Andes Norte project in El Teniente. Just to explain what this means is that this section of El Teniente mine, it was expected to replace the depletion of other historical areas in the mine. So in short, around 100,000 tons of copper expected to replace production in Teniente are suspended and for an undefined period. And the main explanation for this suspension is that the technology to exploit in deep underground areas is not enough to face the challenges that very deep underground mines are posing to companies. So these are just two examples of how deep are the challenges for a mature industry like the Chilean copper mining industry.
How about the investment dynamics? Obviously, in the case of Codelco, this is essentially a state producer and reinvests money that it earns out of producing copper and puts it back into the system to continue to try to at least keep that copper production stable. The greenfields versus brownfields is an interesting one. Major companies have tended to focus more heavily on brownfields because, well, that's what they can do best in a way. They know. Greenfield is one of those things which is, you stick a finger in the air and is it going to work, isn't it? And it, again, not wanting to be critical, in the good old days, then, exploration was the bedrock of creating great companies over the very longer term. But it doesn't strike me that there's been a big, massive influx in interest in exploration with copper at almost $15,000 a ton, or am I wrong?
Well, we have seen a paradoxical situation in the exploration industry. We have seen an increase in expenditure, but a decline in discoveries and the growth of reserves.
Lower hit
So
rate.
that's a beginning of the supply chain in copper, and we have a structural problem there.
Yeah.
So Simon, please.
Yeah, a simple question. Has Codelco in recent years cut back its exploration budget?
Not significantly. Of course, the financial constraint in Codelco are changing a little bit the capital allocation, but we haven't seen a drastic drop in exploration expenditure in Codelco. Codelco has a massive amount of mining property in Chile, which is probably something that Codelco needs to accelerate to improve its operation.
Yes.
But not a big drop, Simon.
But that's it. I think that's a good point to let's move into a slightly different line of conversation. And this is the bit where we won't be able to provide all the answers. We have clearly in recent podcasts highlighted the fact that there is a supply problem. How long it lasts is a function of a whole bunch of things, and I know Simon has a strong views on that there'll be a lot more demand destruction in the equation than people think, and we are starting to see signs of that. That's surely a longer term thing, but are we missing a slightly bigger point, or is the industry, and in particular when we come back to talking about big companies in particular in the industry who are the pioneers of custodians, let's say, of future supply of copper, are we missing a big point here? Has copper been mispriced? That's it's not a very provocative question. I think it's something that a number of big funds have addressed. And I know Simon and I have almost perhaps diametrically opposed opinions on that. But I'm not going to answer that. But I'll pass it over to you two fine gentlemen first to have a crack at it. Are we in an era which is not just the China boom? Is this something that's even bigger than that and more long lasting? And it's not just a copper story, I would say.
Well, I think that is a huge question, Andy.
You've got 3 minutes to answer it in.
Well, I'll answer it in a simple way, which is substitution. You are seeing a lot of changes taking place in the way and how much copper is used in data centers. If you go back to a year ago, the numbers that I had from a major fabricator was that for every megawatt, 50 tons of copper was being used. There are so many changes taking place now, particularly with the move towards photonics, which will completely replace all copper wiring in a data center. And that's being promulgated by NVIDIA and others. Then there is the bigger question of substitution. Let's take one example only because of the shortage of time, low voltage underground cables.
Mm-hmm.
In China, there is now a new policy of replacing copper low voltage underground cables with aluminium because they are a surplus country of aluminium, whereas their copper smelt industry depends upon the import of concentrates. So what I was able to piece together that between 1996 and this year, that the amount of copper contained in the underground cables was between, let me find the figure, 5 million tons and 11 million tons of contained copper.
Mm-hmm.
If, for instance, we take 8 million tons as the halfway house, over 20 years, that's a loss of 400 odd thousand tons.
Yes.
It's interesting that Nexon is developing a situation where they will produce their fine copper wires completely from reprocessing existing cables like these underground cables.
Yes.
And they are saying that by 2028, 25% of their output will come from reprocessed old cables.
Well, that's a really interesting one because we've talked
Yeah, I know.
before about how copper returns from spent
Exactly.
copper have been way below what they should be. And I've run into some instances recently about efforts to increase recycling. It's a complex story because, of course, someone has to pay for the recovery and the redistribution. I think I would tend to agree with you. And then the question really arises to, well, what is that material? What is the underlying consumption growth in the original thing? So you're talking about two things there: one, increased recycling, and switching out of copper in a particular use into something else. Now,
Then if you put this onto a global basis, ex-China, low voltage underground copper cables assume in round numbers 1 million tons.
yeah,
Substitution is going at a steady pace because the price ratio between copper and aluminium is now between 4.2 to 4.3, whereas the ratio whereby historically the substitution took place was between 3.5 and 4.
yes.
So
Well, that's an interesting one in itself because
yeah,
if you're talking about substituting copper for aluminium, it's almost like a circular reference because aluminium too has to be dug out of the ground and smelted and refined somewhere. But let's hang on to that thought and come to a bit of a wrap up, and maybe hand the baton back to Juan Carlos, because my hypothesis on this, I hear what you're saying, Simon, that substitution and turning to alternatives like more efficient recycling, which is absolutely needed. But if supply growth is growing way more slowly than even that sort of latent net demand growth, then we're still in an era of surely long-term price accretion. Are we going to have 10, 15, 20 years of blessed prices despite all these underlying trends of substitution and thrifting?
Well, if we look at the portfolio, the global portfolio, we can't find enough projects during this decade, guys. I have to. This is my honest answer.
Yes.
we have a shortage of copper projects this decade. The situation starts to improve next decade. So we have a sort of reaction coming. But the question is, yes, how these numbers matches with the demand perspectives. As an economist and also as a Chilean working in the copper industry for decades, we are always watching the cyclical behavior of copper. Actually, in Chile, we have developed a fiscal rule to prevent excessive incomes or shortages of money because of the cyclical behavior of copper. So from that perspective, I try to be a little bit conservative in this evergreen and ongoing upward trend in copper. I think cycles exist and will continue existing. So, but at the same time, I have to acknowledge the current situation looks quite exceptional.
Yes.
The supply story that we have commented here exists. The geopolitical change, we are in a geopolitical transition, and this is not a minor, in my opinion. The hegemony of the United States started in early 20th century, and now we are in a different situation. And the challenger, China, is not only it's not a small country; it's a country with a track record of.
So this is, I mean, that's a really important point, Juan Carlos, because I think you've sort of summed it up quite well there in the sense of, are we moving into an era of different strategic value appreciation of commodities and resources? We are no longer in that sort of old world of market economics dictating what happens. And that's going to be an interesting one in terms of how miners, producers of these products, respond to it, because of course it's a difficult one. They're hostage to the fortunes of their host countries and where they operate, and that's a very difficult one to plan for. But is this now a strategic pricing premium associated with the chaos or inverted commas chaos that we seem to be seeing in the world? We are in a bipolar or possibly more multipolar world, and is that translating into higher copper prices amongst other commodities?
Well,
for me, my bottom line is that we've entered a very volatile world where you are going to see economic troughs and economic booms in the space of 6 years. So prices are going to move in a very violent fashion, probably from, say, 16,240 as a peak at the end of this year to maybe half that price next year, and then moving up to an absolute peak of $28,000 in 2030-32. Convert that back into current US dollars, and it's the same price.
Well, I think that's another podcast in its own right, because I guess when you start talking about shifts in strategic alliances and importance and the bipolar or multipolar world, then you also start to talk about a change in the dynamic of how you price these commodities, and how the institutions around that mechanism also change.
That is definitely a podcast on its own.
Maybe we're only at the very beginning of that
we
journey.
Are.
Well, look, I think we're
much longer. For instance, for how much longer is China prepared to be a price taker and not a price maker?
But that's yet
There you
another
are.
podcast. Yes. Well, I think we need more than 40 minutes for that one. So if you want to learn more about us, check us out on our website, www.theworldcopper.com. We're here every month. We'd like to see you again. Please join us. And in the meantime, safe travels, and we wish you well.